Cryptocurrency Investing, a Beginner's Guide. Would you consider buying some cryptocurrency? While Bitcoin may be the most widely recognized cryptocurrency, there are actually thousands of others. Investments in cryptocurrencies can be made in a variety of ways, from buying cryptocurrencies themselves to putting money into funds and companies that specialize in the crypto market. Direct cryptocurrency investment is possible via crypto exchanges and select broker-dealers. Educate yourself on the ins and outs of investing in one of the most forward-thinking asset classes today. What does cryptocurrency mean? Digital currency is only distributed online. Bitcoin prices fluctuate like stocks and bonds. Digital coins, tokens, or units are used in cryptocurrency transactions. Any company that facilitates cryptocurrency exchanges will sell you coins, tokens, or units you can buy and sell with others. Cryptocurrencies are decentralized, meaning there's no central authority. No one manages money supply. In the US, the Federal Reserve Board regulates currency, prices, and interest rates. Crypto markets are unregulated. The management of cryptocurrency is handled by a system. There is a central database that keeps track of who owns what amount of cryptocurrency. Cryptographic units are generated by the system. There is not a single location where cryptocurrency is stored. It is not possible to use online banking. Bitcoin is currently the most widely used cryptocurrency. The term altcoin refers to any cryptocurrency that is not Bitcoin, since Bitcoin has taken the lead. Understanding cryptocurrencies. How does cryptocurrency work? In most cases, the market values an asset. Housing market is an example. What affects a home's value? If real estate is in a desirable area, is high quality, or is in a changing neighborhood, its value may rise. Investing a company's shares are worth what it earns, or the impending success of the company. Stock prices and profits rise together. The value of cryptocurrencies is linked to the market in a different sense. Nothing in the area serves as a tangible asset. It is independent of the company's profitability. Demand is what gives each cryptocurrency unit its price. One way that demand determines a cryptocurrency's value is through supply and demand. As more people invest in cryptocurrency, its price rises. The more cryptocurrency you buy, the lower its value will go. Both novice and seasoned traders are thrown off by this. Investors in high-risk assets and volatile assets may have a different opinion. The value of a volatile asset is one that is subject to extreme and rapid shifts. Penny stocks are a high-risk investment that are considered acceptable. It is possible for wolves on Wall Street to make a killing with them, but average investors should stay away from them. Investors make money whenever the prices of cryptocurrencies go up. Blockchain explained. How is crypto an asset? How can something without form have value? First gold, then silver-backed American currency. All currency would be backed by gold or silver. The government values every bill and coin. Home-printed dollars are worthless without government backing. How can online purchases be valuable? Virtual currencies solve this issue. The government prints and inspects $1 bills. It's unique. It's yours. Digital assets are difficult. This can be seen in digital photos. Codes are used to represent digital images. A picture of you was sent to a friend via email. The code is sent to the friend in an electronic format. The secret was deciphered by you and your friend. It is not helpful to copy the code. Or perhaps one of your friends? At the moment, there are clouds. The blockchain code is responsible for the distribution of cryptocurrencies to their owners. On a number of distinct computers, duplicate code is generated. Blockchains need long codes on tens of thousands of computers to work. A public ledger is the network of blockchain nodes. Blockchains verify cryptocurrency data. machines compare database changes. Legal transactions may require a cryptographic key, like a password. Blockchain code is data only. Should you invest in crypto? It's possible that you're thinking about the upsides and downsides of investing in cryptocurrencies right this second. If that is the case, then that is perfectly acceptable. Considering that Bitcoin and other cryptocurrencies frequently go through periods in which their prices go through periods of wild fluctuation, investing in them comes with a high degree of inherent risk because of the nature of the market. You buy Bitcoins. A significant number of Bitcoin investors are driven by positive recommendations. More people pay attention when influential figures in politics or business praise Bitcoin. When Bitcoin is discussed in a movie, article, or some other form of media, its popularity tends to increase. Bitcoin is purchased by people who manipulate stock markets. They talk about investing with thousands of people who are just starting out. Demand raises a cryptocurrency's price. Cryptocurrency values can change quickly. Early unit sales could yield a huge ROI. Manipulators do too. When demand is high, they make a profit. Selling can be tricky. Predicting the market's movements is difficult even when volatility is low. In hours or days, the crypto's value could plummet. Unsold units will fall in price if demand falls. Those willing to take calculated risks can profit by watching the cryptocurrency market and acting when demand surges. Risky cryptocurrency investments shouldn't be your main focus. You may know that cryptocurrency values have been falling. Invest in high-risk assets like cryptocurrencies. As with any high-risk investment, you should generate passive income to offset crypto losses. How to invest in cryptocurrencies? First-time investors in cryptocurrencies might feel overwhelmed, but the process is actually quite simple. You need a photo identification card issued by the government, the details of a bank account, and access to the internet in order to invest in cryptocurrencies. Cryptocurrency can be bought by brokers. Information pertaining to oneself and one's finances is stored. Since you're prepared, let's make some investments. People who are willing to take a chance on cryptocurrencies frequently ask themselves, how do I invest? This is a common question because there is currently no standardized method for investing in cryptocurrencies. After you have obtained cryptocurrency from your chosen wallet, you are able to send it to the exchange in order for it to be traded. This can be done by transferring the cryptocurrency. Investing responsibly calls for taking additional precautions. Validity, security, and privacy are three issues that arise when dealing with cryptocurrencies. It's easy to see why people are reluctant to invest in cryptocurrencies. Conducting research on the cryptocurrency and the platform it runs on can help mitigate risks. Learn who the current market leader is. Do some research into the background of the company and the evolution of the platform. When compared to other types of investments, the possibility of having your cryptocurrency account hacked, or experiencing some other form of technical difficulty, is significantly higher with cryptocurrency. Gain an understanding of the field in which you will be working. People frequently get started on their search by looking at the websites that are used by well-known financiers. The stability of the market can be helped by this, in addition to having a strong corporate framework. You should make it a point to read all of the terms and conditions of an online cryptocurrency exchange, before you make a commitment to using that exchange. You can get information about the company's operations by reading the prospectus that the company has available. You are in a much stronger position to make a decision regarding your investment now that you have access to all of this information. Because blockchain technology exists, it is now possible to determine who the legitimate owner of any particular cryptocurrency unit is. This was not previously possible. It is impossible to extract any value from the tokens that make up a cryptocurrency. Instead, their value is determined by how much consumers are willing to pay for them in today's market. Because of the high degree of volatility that cryptocurrencies exhibit, investors need to proceed with extreme caution when dealing with them. Investing money in cryptocurrencies follows a straightforward procedure. Create a trading account with the cryptocurrency exchange that best suits your needs.